Hey everybody, hope you're doing well. Today we're going to cover the QQQ for the week of April 26, 2021. There's a lot going on this week, let me tell you. About 54% of the total Q holdings are announcing. So let's just jump into what's going to happen this week. So what's the net? So for last week, or this week, since it's Friday, we projected it was going to be flat. So it's pretty flat. It's only about 0.4% down for the week. We consider anything flat that's -1 to +1. You can't get a whole lot flatter than not even half a percentage point one way or the other. So, but there's a lot of volatility this week up and down. But again, super flat this week as we projected. Also projected Netflix would miss earnings. They missed earnings. We projected Intel would have a difficult time this quarter and would decline stock price post their earnings, which they did. But there's upside on their forward-looking projections, which is great. If you want to see the content we have for earnings announcements to write up some of the analysis, just go to prep2grow.com/QQQ and you'll see our analysis. You'll see the material I'm presenting here. You can just go find it there. For this week, it's cautious bull, really just because it's a massive earnings week. Again, 54% of the total Q holdings is announcing this week. So clearly, if a couple of them miss earnings, then it's going to be a very bad week for the Qs. But as we look at the Qs as a whole, there's a lot of good stuff happening. So company growth is outpacing stock growth, which is great, which is exactly what you want to see. So there's buy opportunity, or it's a very strong bull signal. Positive economic indicators, again, more stuff, goodness happening around the employment markets and whatnot. So good things there. Some of the things to be concerned about is 54% of the Qs is announcing this week. Again, we're always concerned about that. Prep to Grow does not play earnings. It's risky. Earnings are always risky. We never recommend anybody playing earnings unless you know exactly what you're doing or a super experienced trader, or you really know and analyze a company well and have a good feeling about it with a lot of supporting data. Just because a simple word by a CEO or CFO within an earnings call can tank the stock. We've seen it happen with a bunch. Facebook being the number one culprit of what not to say in earnings. They've gotten better over the last 12 months, but still they got to clean that up. Other is technical resistance, 52-week high. We would have that usually in red if corporate growth or company growth for the Qs wasn't so high. But again, it's just, it's a firewall that people don't like to go above for 52-week highs. So it's very close to that. I think it's about 1% away, if not a little less with the end of the day of trading probably. There still is a strong market bubble. It's reduced quite a bit week over week. Last week, our stock to growth or corporate growth ratio was 3.7. If it's something less than 1, that's the sweet spot. That's a great buying opportunity. If it's above 1 or above 2, really, then it's looking like it's going to be a bear and you're going to start to have a lot of downside protection. So with a bubble, certainly it could weigh heavily and pull down the Qs of the rest of the market, but Qs in general, very, very strong. Let's look at the growth or predicted growth. It's still off the charts. I mean, 51% growth since Jan 1st, 2020 to current date. It's up 1%. Their actual stock growth is down about a half a percentage point. So there's when you see something like this where growth outpaces stock growth, so the first one versus the second one, it's a good thing. That means growth is going and the stock will catch up because it always does. Historically, whenever this kind of ratio that we've seen from our algorithms, it always catches up, which gives us a 0.9 stock to growth rate, which is exactly what we look for in buying or expecting a bull industry. Analysts still, I don't know what they're doing or what their expectations are. They've declined their expectations by -1. We don't see it. We definitely don't support it. They've done this a couple of times, and invariably, I think they'll probably adjust upwards, or they themselves see that the general market is in a bubble and is protecting their estimates. So it's not really, we don't see the data to support what the analysts are projecting with the continued pullback. So I think this is the third or fourth week in a row that they've adjusted their earnings for sure downwards. So we'll see. Short term, definitely do not see that. Let's get into who's announcing next week. Well, let's talk about the previous week, so April 19th. A lot happened last week, 7.1% of the Qs. We're going to clean up the slide for next week just because this is a very busy earnings season. Intel, again, we talked about. Netflix, we talked about. Those are posted at our website, again, preptogrow.com/QQQ. For this week, like I said, 54% of the total holdings announcing all the biggies: Tesla, Amazon, Apple, Google, Microsoft, yada, everybody's announcing. Next week, a lot less, 7.6% of the total holdings. Some notable ones: Activision, Xilinx, Microchip, Monster. We love Xilinx, probably the best out of the bunch out of that. But let's jump into everybody that's announcing next week. We're going to cover 5 of them. So we'll jump into Prep to Grow application and talk about them. So this is the Prep to Grow application for our current subscribers. If you want to see who's announcing for the week, all you got to do is pop out your filter, pop down to ETF, select QQQ, see who's announcing over the next 3 weeks, hit apply. You could also have a save screen if you want it. And I'll show you who's announcing over the next 3 weeks. Also for recommendations, if you want to avoid earnings and the volatility that goes on earnings, you can also do the reverse, which is just show me everybody who's not announcing over the next 3 weeks. And you can see that as well. So let's jump into the 5 for the week that we're going to cover. Let's start off with Tesla. Tesla, they're great. We've been tracking since 2017. They continue to grow, not quite as fast as they used to, but they're a big company now. But they're pretty much in alignment where we expect stock growth and company growth to coincide with each other. So actually, we recommend this today. It bounced today pretty heavy. It went up about 2% today and hit our target immediately. And so it sold off. So our forecasted stock price was $734.98. It hit it today, so it hit exactly what we're expecting to do. They are announcing earnings on April 26th of next week. They're also part of many ETFs. They're part of almost everything. People love to have them. A lot of course, options are extremely expensive for these guys. Always unusual option activity for them. But in terms of technical indicators, I mean, they're pretty close to everything. They're above 5 days, 20-day, but not above their 200-day and not above their 52-week. Again, it's hit our predicted price targets. We think they're going to have a good quarter, but they're at where we expect them to be. So let's jump into Facebook. Facebook is announced on April 28th. This was recommended today. This was a stock recommendation, and we expect that they're going to decline in price by 10.9%. We usually, for stocks, we like things that have a success rate or 30-day success rate of 80% or above. We rarely miss on stock recommendations. We're close to 98% accuracy for stocks, if not a little above that, in terms of ones that gain 5% within a 30-day period of time. So we're very accurate with stocks. This is a little bit low. 5 days, pretty good, close to 80%. So that's why we're talking about them. But a good chance that they're going to decline. In terms of their growth, they're not the same company they were last year. May of 2020. They're not growing as much as they did last year at the time. They had a massive drop in corporate growth in Q4, and they've recovered strong in Q1, but not at a pace of where they were last year. And thus, it's probably what the algorithms are picking up on and predict that they're going to drop 10%. Again, earnings is super volatile. Who knows what's going to happen? They're up 1.5% today. Certainly expect that the market's going to treat them nicely until they get into earnings. But they're all near their 52-week highs. They are at a 52-week high, I think. And so they're right at the barrier that they've always hit. So use caution on Facebook. don't, if we had to look at this, we'd look at puts, but our accuracy isn't quite high enough for puts. So let's jump into Apple. These guys were recommended on April 20th. They're announcing on April 28th, 2021. They're, of course, part of SPY and QQQ. We have pretty good accuracy around them. We're predicting that they're going to pull back a little bit, 7.6%. But I gotta be honest, our algorithms love to hate Apple. I don't think I've ever seen a call on Apple since we've been doing this. So our algorithms just love to hate Apple. They're probably PC fans, but well, they do run on PCs. But just to note, it is expecting to pull back. Our data, if I look at growth, the stock, I mean, Apple's growth is insane over the last since 2019. I mean, they're 60% growth, corporate growth since 2019, and they're crushing it. But I think from a technical perspective, they're probably pretty close to where they actually are at 52-week highs. They're at 52-week highs, and so expect to pull back. Again, we're very accurate with stock recommendations at this range. Puts not so much. We like it to have it above 90%. So take this with a grain of salt. Again, it's earnings seasons. Apple's always historically done real well with earnings. And our algorithms love to hate them. So just take it with a grain of salt. We're expecting a decline, but our algorithms actually get it right very frequently. So 273 times out of 321 times it's gotten it down correct. So be cautious if you're doing calls on Apple. AMD, we've been tracking AMD since 2013. This is a stock. We are on April 19th. They announced earnings on April 26th. This actually sold. This one we predicted was going to go up. It's actually past what our original stock price was, so that's why it's saying it's going to go down. Sorry, this is a put. I was going to go down. They're high. They're probably at their technical levels of high. So yeah, they're all past their technicals. It's up 4% today. This sold off on the 19th, so 1 day in and out. AMD looks good, to be honest. Algorithms are very accurate when it comes to this level, so greater than 90% is good. It's already sold off at the projections. We had a predicted stock price of 79, so at the time that it sold, so that's still probably an accurate projection. It could be technicals or it could be something else that the algorithms are picking up. Just like with Apple, I mean, AMD has a huge amount of corporate growth. They're actually currently outpacing their stock price, so this could have been an older recommendation and changed. But let's get into the next one, Kraft. Kraft crushing it, just like Tesla and Apple and AMD from corporate growth to stock price. We're expecting, this was recommended from April 15th. It's the stock, it's still active. We're expecting a 13% growth for them. Again, our stocks are incredibly accurate. They're high, right? So they're down a little bit today. They're at their 52-week range. They're at the 220 and 5-day range. So they're high, but their growth rate is looking exceptionally good. Their growth is actually outpacing their stock growth. So this fits our sweet spot as well. So for the week, these are the 5 that we're covering. We'll probably cover 2 or 3 of these within our weekly write-up. So let's jump into, is it looking longer term like a bear or a bull, and what the projection is going to be for at least the next 30 days. So this is our bear versus bull chart. Prep to Go usually sees shifts happen 30 days out. We picked it up a shift here back at the end of February. It took a little bit longer, 30 days. It hit out in April, but there was a pullback, a little bit of a pullback with a recovery now. It looks like there's another shift occurring from calls from bull to bear. So within the next 30 days, there may be some form of pullback of 5%. Usually when we see this kind of shift in these two places, there's about a 5% pullback. So be cautious 30 days out. There's a high probability of a pullback of about 5%. So use caution in doing any kind of calls. Now, if we go to the next slide, 30-day predicted stock price. Again, what we like to see is kind of a balance between this. a lot of upward pressure. If we're looking at a bull market versus a bear market, right now there's downward pressure, right? So last week there was downward pressure. It dropped a bit this week, or there's a lot of volatility this week, and it's down a little bit this week. We see less downward pressure going out from the next week to 30 days. So that's good, but still, it looks like there's some form of shift happening. At least our algorithms are picking up on some form of shift that's happening within the broader market. Again, our algorithms just don't look at the QQQ and assessing if there's a bull or a bear. It takes the whole market in consideration, as well as what's specifically happening with the companies within the Qs or the NASDAQ-100. So there's some serious downward pressure happening. It's leveled off a little bit over the last couple of weeks, from the week of April 4th, but still there's downward pressure. Some of that certainly got relieved this week with the pullback that occurred beginning of the week, midweek. But again, we see that there's a potential for a shift for another pullback within the next 30 to 45 days. So thank you for your time. Hopefully you found this helpful. Again, if you want to find this information on it, just go to preptogrow.com/QQQ. Everything we talk about is generated from our big data AI platform called Grow. Is recommendations. We don't give financial advice. Again, it's recommendations in our analysis of the market and our recommendations geared towards that. But again, if you have any questions, please visit us at preptogrow.com. If you like this content, please like or subscribe. If not, happy trading and have a great week. Take care.